Why do you think that China's issued this directive to banks to trim their exposure to treasuries now?
Morning, Lizzie. It's part of an ongoing saga of what China has been trying to maneuver. Well, China wants to steer away from its dominance on the US, whether it's in investments or whether it's in industry. And what we are seeing is the former one, obviously. And it's an interesting story. It's a big ship turning around, but it's going to take, it will take place over time, and the moves will be gradual. If you look at China's holdings of treasuries, they were about 1.3 trillion about a dozen years ago. Now that's come off a lot, to the extent that their treasury holdings are only about 682 billion. So that's already less than half of what they had about 10, 12 years ago. And you know what the story talked about today was China directing its banks. It's not the state holdings, but the holdings held by banks, which are much less consequential to their entire portfolio. So I think that the reaction in treasuries has been muted, but it's a big story that we need to be worried about, which is one of China circling and diversifying away from treasuries, and that will have an impact on treasuries over the longer term.
Yeah, it's not just treasury yields up, of course, it's also European bond yields. Then do you think that's going to last?
Sorry, can you come again?
Do you think it's going to last, then, that we've also got European bond yields higher, as well as treasury yields off the back of this?
Well, I think that, it is going to weigh on long-dated treasuries. If you have seen the 30-year yield, we have not been moving meaningfully below or above 490, but I think that the risks are to the upside in terms of yields. But if you look at the German narrative, Lizzie, I think it's a different one, because, if they are going to diversify away from US, where are they going to go? They can't go to Japan because yields are surging, and they will probably face losses in the coming years as the Bank of Japan normalizes policy, and they will probably look to diversify into the European Union, which is good for German bonds, because here is an economy where yields are going to be stable, where certainly the European Central Bank is not looking to move on rates in the short term. So I think that Germany is a natural home for China's holdings, and I think that bonds will benefit from this move.
And then President Trump's Fed chair pick, Kevin Warsh, of course, has called for a new Fed-Treasury accord. What's that likely to entail?
Well, on the face of it, given his pronouncements as Fed governor in his previous life, he would imagine that he is arguing, he's very keen on shrinking the Fed's balance sheet. But today's story kind of suggests that, he may be willing to collude with the treasuries. But if he does that, the treasury is unlikely to want a shrinking of the balance sheet, because that will imply tightening of financial conditions, which is not what the treasury wants. They want lower yields. So it is going to be interesting to see how Warsh behaves as the Fed chair, as opposed to what he's been saying all along. So I think that, it's an open question to what extent he will be willing to collaborate with the treasuries on this.